Despite the slowdown in activity, the labour market remains resilient overall, although there are now some signs that job growth may lose momentum towards the end of this year. While the short-term outlook remains subdued, the economy is set to strengthen again over the coming years as inflation falls further, household real incomes recover, and the demand for euro area exports picks up. Turning now to inflation, which, as you said, Chair, fell further to 2.9% in October. That's the latest headline reading that we have. And this fall reflected a general decline in inflation, but was also helped by what we call the base effects. These effects were particularly visible in the low rate of energy inflation, which stood at minus 11.2%. Food inflation has also declined, but is likely to remain strong for the rest of the year. This contrasts with inflation development in the United States, the first topic chosen for today's hearing, where food inflation has been more contained, while core inflation picked up faster after the pandemic. Inflation, excluding energy and food, often called core inflation, has continued to moderate. It fell to 4.2% in October, owing to declines in both goods and services inflation. Most other measures of underlying inflation have also come down. At the same time, the ECB's indicator of domestic inflation, which excludes items with a high import content, has not come down by much, reflecting the fact that inflation is now driven more by domestic sources than by external sources. And that you will find on the first page in the right-hand graph, which shows in yellow what is actually high domestic sources. Wage pressures, meanwhile, remain strong. Our current assessment is that this mainly reflects catch-up effects related to past inflation rather than a self-fulfilling dynamic. And we expect wages, and again that's on the first page at the bottom left, where you have wage contribution in green and red for profits. So wages will continue to be a key factor driving domestic inflation. But at the same time, the contribution of profits, as I said in red in that graph, which accounted for much of the strong domestic price pressures seen recently, is now weakening. Looking ahead, we expect the weakening of inflationary pressures to continue, even though headline inflation may rise again slightly in the coming months, mainly owing to some base effects. However, the medium-term outlook for inflation remains, of course, surrounded by considerable uncertainty.